Well, hello. How are we all feeling? It's that time.
A little hot.
We need to do a stretch. Isn't this when you're supposed to do like a seventh inning stretch at this time? Is that what we're going to do? Thanks for joining us. The topic that we're going to talk about a little bit today is mainly focused on retail, but I feel really lucky because I feel like I'm out with my friends. I've known a lot of these guys for a long time now, and it's really fun to be on stage with them talking about something that's really near and dear to NASDAQ's heart. You know, we run the matching engines that trade, a significant amount of the equity markets in the US. And we can see it firsthand that trading has significantly changed over the course of the last decade. And where the majority of the markets were really playing in the institutional space, we've now seen a huge transformation in retail becoming about half of the US equity volume through the exchanges. So retail is here to stay. I think we've learned that through the past couple of panels. We've talked about this a bit. But we at NASDAQ are seeing it firsthand through the actual engines themselves. Retail is here, it's half the market, it is a huge participant, and it has the power to really actually sway the market at this point. And that's what we're going to talk about today. So to do something a little bit different, I'm going to ask that each of the panelists actually introduce themselves, what they do, where they came from, very briefly, starting with Sam.
Sure. GM of brokerage and crypto at public.com. We're a investing platform where you can invest in all types of different assets, whether it's stocks, bonds, options, crypto, ETFs, all sorts of stuff. I was at SoFi for a while before then, so I spent about a decade in the retail space, and definitely a lot has changed, so looking forward to chatting about it.
I'm Dan Pipitone, CEO and co-founder of TradeZero Holding Corp. I have been in the active trading space pretty much my whole professional career. I started a firm called Noble Trading in '99 and sold it to Lightspeed in 2010. And we launched TradeZero in 2015. We're a multinational broker with presence in US, Canada, and the Bahamas, offering both commission and commission-free access to the US equities and options markets.
Hi, my name is Yoshi, co-founder, CEO of Alpaca. At Alpaca, we are basically FINRA, SEC, DTCC member, clearing custody brokerage firm. We currently work with about 200 broker dealers in 35 different countries. Same as Dan, we are multi-licensed companies, licenses in United States, Bahamas, and Japan. So I started my career at Lehman Brothers. So I did all the subprime mortgage-backed securities and asset-backed securities. So I'm excited that a lot of derivatives are coming back to the market. So that's why I am.
Hello, everyone. I'm Eric. I'm CEO of GTN in the Americas. We power 400 retail broker-dealers around the globe with our trading technology, APIs, execution and clearing capabilities. Before joining GTN, I ran the retail trading platform in Denmark for Saxo Bank. I was there for 4 years. And then before that, most of my career was on the institutional side, where I was at Barclays Capital in London for 12 years, and then Merrill Lynch in the US for 10. And it's nice to be here.
Great, thanks guys. So I think we're going to continue with your careers. You started off on Wall Street, and now we've moved to Main Street, and that's the topic of this panel today. So, when we were chatting a bit, the four of us, on Friday afternoon about all this, Eric had some really interesting sentiments to say about what you've seen in that transformation from Wall Street to Main Street. So can you start to share a little bit about that, what you've seen over the course of your career and specifically at GTN?
Yep, sure. It was actually, I haven't been down in this area in a very long time, but I started my career in this complex with Merrill Lynch in 1998. And one of the benefits we received as employees is we received, I'll put it in quotes, discounted stock trading of $100 per trade. So my first trade at a university was I bought $1,000 worth of Microsoft, paid 10% commission on the way in. Luckily, it doubled that year. I quickly sold it, spent all the money in Cancun with my friends. And if you fast forward to today, that same person out of university starting their trading and investing journey, they can buy Microsoft or a fractional share of Microsoft on their mobile device with advanced charts and news and research for free. or they can build a diversified portfolio of ETFs, through a robo-advisor as well. So I know in this industry, we really like that term, democratize. Everybody is sort of democratizing something. I'm sure we have that word on our platform, on our website somewhere. But I think it's true over the past 20 years, trading and investing really has become democratized for Main Street and the end retail investor, and I think that's a great thing. And I think the fact that that friction to get started has been removed, paired with a 15-year bull market in the U.S., as you mentioned, has driven retail volumes to be half of the market. And I think as long as that continues, I think we'll see retail traders to be a very large percentage of the U.S. market. And I think that's good for society, and I think we're happy to be a part of that change.
That's fantastic. Completely agree with all those sentiments. And I think as we've had to kind of transform technology and the way that we serve these retail investors, we've had to build apps a little bit differently because they trade differently than Wall Street does, right? So Sam, can you talk a little bit about what, Public has grown and come to be in this era? So how has that looked for you guys?
Sure. It's definitely, I think, a 24/7 game now. A lot of assets just trade, Monday to Friday, but folks are still, waking up on Saturday and Sunday and wanting something to do, wanting something to look at. And I think without having, a bunch of different ways for them to access the markets, 24/7, whether it's through your app or, through other things that you can provide for them, I think that's, really kind of the goal here. We have, whether it's price alerts, bringing people back to the app, making them stay informed, whether it's using AI to say, not just, hey, what was this earnings announcement, 3 months ago, what's driving the stock this week? What was driving the stock, last week? And having these really, really high touch points and speed to market, I think is, also really important. I think what NASDAQ, really helps us do, a lot is just, everyone wants real-time pricing, right? Even 16 seconds delayed is, not applicable for most of these folks. They grew up with, real-time news, things at their fingertips. They want it now, they want it accurate, and they want to be able to take action, whenever they can. I think another thing that, we're seeing is where do these folks go for their advice, their news? They're not going to CNBC, right? They're not even going to WallStreetJournal.com. They're going to TikTok. They're looking at, their friends. They're looking at influencers. And so, for us, we've actually reached out to a lot of these, these influencers and these influencers because that's where people get their information. And if you're not stepping up and meeting these folks, where they're getting their news, then, they're never going to think about you, at all.
So let's take that one step further. They're getting their news through all these random, possibly untrustworthy sources. And then they come back to your application. So I think I'll toss this either to you, Sam, or Dan. How do you ensure that when they come back to your platform, they're educated and they're making a smart decision?
I think from the educational standpoint, it's working with known and trusted educators to provide sort of, listen, we deal with a lot of sophisticated and active traders, but that's not to say that they know everything. And so by partnering up with educators that are unbiased, that aren't making recommendations specifically, but that are teaching strategies and tips on how to manage risk, most importantly, how to choose stocks based on tried and true criteria, and doing things to get in front of folks that is not construed as advice, but is really educational, leveraging the tools and the access that our platform offers.
I think on the flip side to that, we can't be too paternalistic, right? We can't control what these folks are going to do. We have to let them, within measured guardrails, right, make mistakes, because that's the only way people learn. And I think what we've seen over the past 3 to 4 years is really a maturation of the retail sector. They're not just punting Tesla stock and GameStop anymore. Sure, they may have done that a couple of years ago. They lost a little bit of money, right? Now they're buying ETFs, right? Now they're doing some covered call strategies. And so without having lost a bit of money, having made those mistakes, right, they're not able to learn. And then when they actually have a bit more money and are able to make more responsible decisions, that's what we're seeing. So sure, you come in 18, 19, 20, and that's admittedly what a lot of kids are doing these days. They have a lot of risky bets, but by the time they're mid-20s and 30s and 40s, they're actually really relatively responsible investors. So I do think it's helpful to, yes, instill guardrails, but allow them to make some mistakes.
One thing we're thinking about in our co-branded white label solutions is how to really personalize that education and deliver it to clients at the right moment when they need it. So if you think about all the trading data we have on the end retail client, we can see what they've traded historically. We can see their current holdings. We can see what's in their watch list. We can see where they go within the platform, right? And based on that activity, we can create a bunch of default personas. And then for each of those personas, create very tailored education and content to deliver to them. So the platform starts becoming much, much more personalized. So like as an example, if my mother was gonna become a trader and get dropped into the platform, we shouldn't be feeding her advanced option strategies, right? My mom's not gonna do that. I hope not. So we're thinking again on how to tailor that. Another thing to think about is for end retail investors, there tends to be these areas where they tend to trip up, not using limits, not using stop losses, maybe increasing their trade frequency after a loss. These are indicators and things that can be trained and taught. So if we see that behavior in our platform, we want to drive specific education to those retail traders, about how they can trade a bit smarter. It's not just about creating an education area of the platform that's 10 clicks away. It's about delivering that content where and when they need it.
Yeah, I think I'll toss it over to Yoshi now. I mean, as you mentioned in your introduction, you're globally expanding, but you also have to expand products as well, right? I mean, as the retail base is becoming smarter, more sophisticated, they want more sophisticated products to trade. They want to go to different countries and trade them. So can you talk a little bit about how you've had to pivot and grow?
I think thinking about this Wall Street and the Main Street and the rise of the the Main Street and retails are coming up. I think it really comes down, in my opinion, is really the cost, because the cost is, if you think about the one account lifetime value of the customer of the Wall Street is really high. So you can pay a lot of money to acquire customers. Hence, everyone's doing top-down sales. And in order to make this Main Street customers to make sense, lifetime value of the customer is super low, which means that you can't really pay for to acquire those customers, and you can't really pay for maintain those customers, which means you need to have all the operating costs to be super, super low. And in order to do that, you can't be relying on the other technology vendors, which means you have to be really internalizing everything you do, so that you can actually provide this super low cost customer acquisition cost. Hence, you can get a lot of users. That's a very, very low LTV. And thinking about those things, right? Going global, we work with 35 different countries. The wallet size is super small. For example, clients in Indonesia or even Nigeria, super small. But how we make the business make sense out of it is we push our basically unit economics really low. Of course, our OpEx has to be very, very low, but I think that's really the key. And then the only way to do that is really to internalize, create new technology and system infrastructure that can cut down all the unnecessary costs. And so that's something that we've been always focusing on in terms of product enhancements, because I think our job is to be an infrastructure. We're API first company, so it's all about which modules can be used separately by whoever the companies want to use it. So in order to do that, we have to make sure that each component of those details are well flexibly available by any companies who want to use it. So that's how I guess we focus about product enhancements.
All right, let's make this a little bit fun. They don't know this is coming, so we'll surprise everybody. We'll start with Sam. We're gonna do 2 rounds. First question, 1 answer per person, so we'll go fast. What's the one asset class that you find to be so interesting you either are adding it now or you want to add it to your platform? What's the dream?
We've got most things, but one of our newest asset classes to add to the platform is fixed income. And I think fixed income is one of the obviously largest asset classes in the world, right? Bigger than the stock market. You can't find it in most retail apps, right? It's really easy, right? You go to Times Square. You ask 9 out of 10 people, hey, buy a Tesla. They open up their app. 2 seconds later, right? $5 a Tesla. You ask someone on same thing on Times Square, hey, can you open up your phone and buy a Treasury bill? You're going to get blank stares, right? 99 out of 100 times. And I think that is finally changing as interest rates start to become more attractive. I think over the past couple of years, we've had the cash wars. Finally, retail I think understands what a Treasury bill is. I think we finally come up that curve a little bit. But access to this huge part of the market, I think is still remiss for a lot of folks. And I think that fixed income is a very compelling asset for essentially anybody, whether you're 25 and looking for some place to put your money aside from your bank, or whether you're 35 and you're looking to have a diversified portfolio, or you're closer to retirement age and looking to create your own kind of portfolio of fixed income instruments. And so I think we're in the early days of fixed income, and I really hope in 5 years we go to Times Square and everyone can buy a T-bill within 5 seconds. But it's certainly not quite there yet.
Dan, what are your users asking for?
So we do equities and options currently. Futures for us is just the next natural progression. From a retail perspective, from a Main Street perspective, I think it offers a lot of it's a product that can really speak to retail. You have the exchanges who've created first the minis and now the micro products that are real specifically geared towards the retail trader. But not only that, as we talk about international, they trade 24 hours a day, and for us, especially here in the U.S., actually, there is for people who want to trade actively, there is no governors around like pattern day trading rules and such, where with fairly low account balances, people can really participate in a meaningful way in the mini micro products on the future side. So it's something that we're really excited about for next year.
Yeah, I think from our side, creating yield-generating products continue to be super important. That can be like FDIC sweep, money market sweep, even fixed income. But I think I actually had one question that I wanted to ask to Sam, the public, because I see that you start offering the corporate bonds, right? Triple B grade. Of course, it sets up 7% to 8%. I come from Lehman fixed income, so I feel this journey of how it came from treasuries and corporates and securitization, down the low, and then thinking about this Main Street and Wall Street. Is that Main Street really ready to have exposure to that risk assets? Even the Wall Street, triple B bonds is pretty risky. Right? What do you think about that public force? Sorry, is this funny? I just wanted to.
No, totally.
I thought this is
Let's do it. Let's go.
We have a cryptocurrency you can buy called Bonk.
Yeah, but
That's a
the
little more risky, I would
bonds
argue,
is
than a high
yield
yield.
generating, right? So that's what I think about, because it's fixed income.
It's a fair question.
Principle.
And I think if you look at the suite of products that we've launched, the first one was Treasury bills, right? AAA rated, guaranteed by the government. Second one was FDIC insured, right? High yield cash account. What else can you offer, right? In the AAA rated, how many more cash products do you need? And so I think what we decided was, hey, retail still doesn't really understand bonds that much, right? Triple B bonds and right are still pretty safe, right? 2 to 3%, default rates. 70 to 90% recovery
That's
rates.
what we thought about at Lehman Brothers. So.
Listen, if we go back to 08, I think we're all in a bit of trouble.
I was just talking about this because I thought it was a fun topic to talk about. I wonder
No, it's a great
what
topic.
everyone
I think
thinks
that's just
about
part of the education, right? And I think that's why on our platform we try and educate you. Hey, here are the different options, and here are the different risks, for these different options. And obviously, this one has a risk of default, has a higher interest rate risk, and things like that. And I think that's where the education comes into play. And what we found is people like to diversify their yield. And so they don't just pick one of these three products, right? They have a bunch of money in their high yield cash account. They've got some money in the treasury bill product, and they've got a smaller portion, in this kind of boosted yield product as well. But I think really it's about offering solutions to retail investors that they might not know even exist.
So, sorry, I'm probably going to come back to you on this, so apologies. But the way I think about this is we already offer pretty much every asset class. So for us, it's not about offering a new asset class. But I think what it really boils down to is taking the existing asset classes and somehow making them more digestible and consumable for the end retail client, right? And I sort of am passionate about this space, so I play around with everybody's platforms. And I played around with Public as one of them. And when I think their product on this bond account is a great example, right? Because bonds are pretty boring, right? But to the end retail client, now that it's become fashionable again with interest rates going up, if you just drop them into a bond filter and say, hey, go pick your bonds from this list of 600 with different yields and different yields to maturities, they get analysis paralysis. It's confusing. And I think what Public did well is they took a pretty boring product, packaged it very well, made it very easy to understand for the end retail client. You can have debates what level of bonds is, if you have triple Bs or not. But I think it's a great example of, I think, where this industry will continue to push towards. It's about taking existing products, like what people did with equities and fractionalizing them, or bonds and fractionalizing them, and making those legacy products more easy to understand and digest for the end retail client. And I think that trend continues.
Yeah, just to prove that point, we'd had bonds on the platform for 8 months before we launched the bond account. You could have bought all these bonds on your own. We had very, very little uptake, right? Bonds are complicated. You go there, there's a bunch of different numbers on there, a bunch of math, bunch of yields. What is this? I don't know. I don't understand it. Let me go away. When we launched the bond account, the first day we launched it, we had 8% of all bond trades in the United States on that very first day, right? So just putting these into a slightly more understandable structure, saying, hey, don't worry about buying and selling bonds, worry about depositing and earning yield, right? That's something people understand. They don't wake up every day and say, hey, let me go buy some bonds. They wake up every day and say, hey, how do I find the most attractive yield out there for myself? And so I think it's not just offering the underlying asset classes, but providing the solutions with those asset classes that really I think is kind of the next level of retail investing. So it's kind of this semi-homemade approach to it. They're still not going to Morgan Stanley, right? They're still not paying 2%, right? Like their parents and their grandparents did. But they might want a little help, right? They might want that semi-homemade approach, not just those bare assets, underneath. Let me build myself, but let me build a set of solutions that achieve my overall goals.
We gonna leave it there with the bonds? You sure?
I just think, as I said, I think that trend of innovating. Again, if you're running a retail platform today, can you really compete on price? No, price has gone to zero everywhere. Are you going to compete on offering a new asset class? Probably not. Everybody roughly offers the same things. To gain share and to stand out in a very crowded and competitive market, it's going to have to be about product innovation, right? And it's one of the benefits, I think, for Main Street is all these providers looking to gain an edge, looking to gain market share. It's going to continue to create new products that will help that end retail investor.
I think when we think about innovation, we have to always think about the history as well, right? Because when you start pushing, which means we're wanting more yield, we want more products, that becomes basically pushing the limits, and that what happens the bust cycle, boom and bust cycle is basically that. So I think of course, Sam, I completely understand. I just threw the question because I thought it was interesting. But I believe what you're doing is super interesting and cool. But at the same time, I always ask myself, because we're the ones who's building the product sets, so that all those different providers will be able to do those asset classes. How much of the push should we be doing to these Main Street investors? Because if we are to start pushing so much, the thing that we've seen even at the crypto sector could happen into this more traditional sector. I think that's a real risk that to me I always think about, because I think we are really we have to be responsible as a custodian and settlement, and then and then of course it comes from my experience as well, how price dropped from the AAA to double B in 20 days, right? And Lehman collapsed. I did see everything, went through that, so it's real to me. So that's how I kind of think about it, how much of the risk taking that we should be pushing in the Main Street.
Well, it's part of the job, though, right? Is we have to balance innovation.
Yes, exactly. That's
with
why
risk,
I think about that a lot.
Why we're sitting here today. It's the best part of the job. All right, let's move out. Let's talk about Main Street for a moment. Where is Main Street? Is it in Springfield? So okay. If Main Street is Springfield in the U.S., wherever Springfield may be, where is Main Street next? So Dan, where are we going to find the next Main Street out of the United States in order to start to really continue to tackle retail investing globally? Where's the next Main Street?
Typically, I think we do think about places like Springfield or the South or the Midwest or even the West Coast. Folks that are not around the financial hubs of the United States. But for us, we've seen really that Main Street has kind of expanded beyond the borders. And I think folks outside of the country, Canada, Europe, Asia, really have a thirst and desire for accessing our capital markets. In my opinion, it's the gold standard. And With retail investing, I think a big part of the growth that we've seen in retail investing is not just happening here. It's folks outside of the country wanting to trade Tesla, wanting to participate with NVIDIA, and those companies that they've become very familiar and accustomed to interacting with on a daily basis, and being able to invest in those in an easy and approachable platform. So I think Main Street is really, the definition for us has expanded sort of beyond our borders in a real meaningful way.
Anyone else want to comment on where Main Street is now? I know, Eric, you gave us a great stat on Friday about your global investors.
So, one of our differentiators at GTN is, we offer access to 90 equity markets globally, pretty much every asset class. And as a result of that, we engage with about 400 retail broker-dealers around the globe. If I was going to pull them to the side and double-click on their volumes, even though they're based abroad, probably 90% of the trading volume is into the U.S. market. So the typical user pattern is that foreign retail investor, yes, he wants to buy a few local names in his local currency, but just as you mentioned, he wants to own Apple, Amazon, Netflix, Tesla, etc. And I think as long as U.S. continues to have this outperformance that it's had for the past 15 years, right? If you line up EFA or EM against the S&P has destroyed international markets. And as a result of that, it's caused a large sucking sound of foreign capital into the U.S. So I think as long as the U.S. continues to outperform international markets and we don't have a reversion to the mean, I think we'll continue to see a massive inflow of foreign retail investors into the U.S. market.
Yeah, we deal with the similar kind of stats as well. Like we work with basically the Robinhood, I would use the word, but like copycat in country A, country B, country C, country D, and then they offer U.S. stocks and then local asset classes. And of course, a lot of them go to the U.S. Because of the obvious reason, and I think it's going to continue.
The only thing I would say to that is that retail is not dumb money anymore, right? I think and one of the things they've done very, very well is not follow Fama French, right? They're not investing in small cap value stocks. They have been the ones investing in big growth companies, and those have certainly outperformed. And so I think put a lot of retail investors up against any active managers, and they wouldn't do too shoddy, especially if you add their crypto holdings in it as well. So I think it's just another I think a lot of folks that aren't from this space still kind of see retail as this big one big dumb group. But it's, I think, far from that, and there's a lot of sophistication in this, and those folks are looking for 24/7 trading, looking for sophisticated tools. They're looking for as fast to market as possible, and really, I think we're building towards them, and institution is now copying retail as opposed to the other way around.
So we are literally at time. We had all these aspirations of talking about 22/5 trading and AI and post-election sentiment, and that's not going to happen today. But I want to thank you guys. I mean, at NASDAQ, we are the home of the corporate listing. And what matters is that investors, are able to fuel capital into these corporates so they can create jobs and create the technology and innovation that we rely on today. And it's folks like you that are helping us do that by keeping retail invested and continuing to innovate, but also protect the investor. So we are very grateful for everything that you're doing and the responsibility on your shoulders and the activity in the market today. So thanks everyone.
Thank you, guys.